There have been 21 property listings on the JSE since October 2010. Craig Smith, who's property analyst at Stanlib, joins us now for more. Craig, one gets the impression there's a lot of interest in the exchange and the JSE, a lot of listings, and that number, 21 listings since 2010, is this a growing trend? Is it going to fizzle out?
So yeah, certainly there has been a lot of listings since October 2010. Even in the last year to date, we've seen a number of listings as well, which has caught probably most market analysts by surprise, given what's happening at the macro level. But I think what's important to note is investors are becoming more discerning, and it's important to have products that are differentiated, and that still gets investors excited, provided it's the right type of.
You say analysts were surprised. Having got over their surprise, what's the explanation?
I think what we've seen year to date, we've seen some interesting new listings. So Equitas is a new listing that's coming to market, I think, this week. They've raised about 650 million rands worth of new capital, and that was heavily oversubscribed. And what they're focusing on is the industrial sector, particularly logistics, warehousing. And that sector is actually still holding up quite nicely. Vacancies are low, and we still like that exposure. So we're finding that guys to support new listings, it really has to be differentiated and products that are have good long-term growth prospects.
So on the one hand you've got differentiation, niches. On the other hand there's consolidation. There's some very big companies now which are getting bigger.
Yeah, true. So I mean the likes of Growthpoint, Redefined, they're all involved in corporate action, and I think that's really a function. It's probably a few things. It's really to also look at reducing one's cost of capital. So the larger funds are generally able to raise equity and debt at cheaper levels. So it certainly helps them from that perspective. And secondly, also finding that opportunities in the physical property space are also starting to become fewer and fewer. So you're finding that the likes of Growthpoint, Redefined are having to turn to other listed counters to actually get quality exposure.
Okay. Earlier on this morning, Safs and Narina were our market watchers, and now Mike Keenan from Absa Capital, we were talking. I mean, the economic picture's not good. I mean, where you turn, there's another number that says things aren't good. The strike and other issues. And a sense of malaise and a huge cabinet that's been appointed, and one wonders if they're going to be able to get a grip on the economic aspects of what's going on. Where does property sit with us? Should we be cheerful about the property sector?
So I mean, our outlook is obviously not very bullish on the listed property space. I think there are macro headwinds. Last week you had S&P downgrading SA's credit rating to just one level above investment grade. You had Fitch as well putting us on a negative outlook. So that means that the next step is probably a downgrade as well to just one notch above investment grade. So, and given property's linkage to the bond market and specifically the long end of the curve, it obviously isn't great for property from that point of view in the short term. So property does obviously rely on what happens in the capital markets. But having said that, we still are finding that the actual physical property fundamentals aren't terrible. They're still holding up. We're finding that the companies are certainly able to grow their distributions ahead of inflation. You've got the sector probably growing distributions by about 8%, and the outlook is to grow distributions by 8%. So which is encouraging. It's above inflation, but I think what to look out for is in 3 years' time. Obviously if it continues on this trajectory, then the spillover or the effect on property will come through as well.
Well, they talk about low growth, or not negative growth, but low growth. But the cranes are all around Sandton, so there's certain areas where there's certainly a lot of property, either new developments or refurbishments going on.
So you are finding that in the office space. I mean, the office sector is a sector that we don't particularly like at Stanlib. Vacancies are in excess of 10%, particularly speaking to Sandton, where a lot of the activity is taking place. You're not finding that that's spurred by new demand. That's really spurred by existing occupiers of space that are looking for newer space. And what you're finding developers are able to do is they're able to either design or build buildings more efficiently, and so the occupants can actually use that space quite efficiently. So their overall cost of occupation isn't necessarily going up too much. And they're getting a nice brand new building in a great location. So we're seeing a bit of musical chairs in the office space, and we certainly aren't seeing any new demand for office space.
What about the geographic location of the growth? I mean, Sandton, we've said, is growing further. I don't know where they're going to put all the cars that are coming in. They're talking about cycle lanes and that sort of thing. The Gautrain has made a big difference to Rosebank and to Sandton. What about the old CBD in Johannesburg? There's talk of redevelopment there. And the old CBDs in places like Cape Town, Durban.
So I think CBD in Johannesburg, there's a lot of vacancies in specifically Joburg CBD. So from an office perspective, it still probably has a long way to go
What's
to
the
really
percentage roughly there?
My
20,
last
30?
number probably 20%, which is high. I mean, Santon sitting probably at about 10% now, given all the new supply that's come on stream. But in the CBD, you probably, you've got buildings which have got low parking ratios, and that's really a big barrier to big corporates actually looking to move into the CBD. And for an office tenant, even though public transport is improving, you still need adequate parking ratios, and a lot of the buildings in the CBD can't really accommodate, to compete with the likes of Santon and even what's going to happen in Waterfall Estate as well with the TAC, what they're doing there.
Yep. A person I know who's a developer in the CBD, taking old buildings, turning office blocks into residential accommodation, very successful. He said there's 3 problems in the city. It's parking, parking and parking. That's the issue. And I wonder if we're just going to choke our cities in the end. What about Cape Town? Cape Town's rather different because of the sea and the mountains. So their CBD has behaved very differently to Johannesburg's.
It has. I mean, the Cape Town CBD is still fairly, it's still well supported by the office users. You have also found over the last couple of years there has been a bit of a migration away to Century City. That node has taken off quite well, and 3-4 years ago, Century City, the vacancies were actually quite high, but what you found is that they've really absorbed a lot of those vacancies, and it's quite a thriving office node. But specifically in Cape Town CBD, that foreshore area is very strong, and we are seeing some activity there as well.
Just one more question on Durban. I was there a couple of weeks ago, and the centre of gravity has shifted so far to the north with the new airport, of course. All that land that's being sold by Tongaat Hewlett, the development is unbelievable. Does it leave the old centre of Durban way behind and never to recover?
I think, there'll probably be a space. So you're finding in Durban, government is still a fairly big user of space, and it's unlikely that government as a tenant's going to migrate to Umhlanga, etc., where the rentals are certainly a lot higher. And I think, from government's point of view, it obviously makes sense to support the old CBDs as well, to try to create some activity around there. But you certainly are finding that most of the large funds are, moving their exposure to, the north of specifically in offices. But what you are finding is there is also, significant potential for industrial development close to the Johannesburg CBD. So hopefully that will have a spillover effect, in the CBD down the line as well.
Fascinating stuff. Thanks to Craig Smith. He's property analyst at Stanlib.